affirmations. Our affirmations. I am a BYOB master trader. Yes, a BYOB master trader. I am the signal. All my trades in profit. I am 777. So good evening, everyone. So you can add to it, just do not take away. And this is BYOB Market Talks, and tonight is about the basics. We take it back to the basics on Tuesday evening. So as you are logging in, drop it in the chat where you're calling in from, along with your affirmations. Now, why are affirmations so important? Affirmations are important because that creates the right mindset. That creates what you wish and what you desire to happen in the market. That's exactly what this is all about. That's why we do what we do. So you want to make sure that you're dropping that in the chat, because you have to write the vision and make it plain. You cannot just say it, because if you just think it, it's just a thought. It's just a thought. So we want to make sure that we are definitely walking in that. So, all right, ladies and gentlemen, let's go ahead and get this call started tonight. Once again, my name is Tasha M. Dyer, the creator of the BYOB Cash Out strategy, otherwise known as the Trade Whisperer. So good evening to each and every last one of you all. So as we dive in, if this is your first time on the call with us this evening, it's your first time with us this evening, let me get a 111 in the chat. Let me get a 111 in the chat if this is your first time here with us this evening. So let me get a 111 in the chat. And then also, if this is, you're still learning how to cash out, you're still learning how to cash out, let me get a 222 in the chat. Let me get a 222 in the chat. Good evening. Welcome and welcome back, everybody. Welcome and welcome back. For all of you all, this is your first time on here, welcome, welcome, welcome. It's awesome to actually have you with us this evening. And so let me go ahead and talk to you just a little bit about how this works. So what we do here with BYOB, understand this is the largest economic empowerment movement in the history of mankind. So understanding that, knowing that what this is, knowing this movement is about financially educating and impacting 1 million families. That's what this is all about. So knowing that, and knowing where we stand and what we stand for, we're here to empower you. You saw those affirmations that you read off. You saw the affirmations that you heard. I am a BYOB master trader. BYOB meaning be your own bank. So you're declaring and decreeing that that is who you are. And you are a part of the largest economic empowerment movement. And then I am the signal. I am the signal. Right? I am the signal, meaning you have to learn how the market talks. That's why it's called Market Talks. So we're going to learn how the market reads, how it talks to you. You're going to develop a relationship with this market. So, and it's important to be the signal and not look to take signals. That's definitely not what we want to do. And then also, as you navigate through there and as you see that, then of course, all my trades end in profit. We want to manifest what we want to happen. So all my trades in profit, and I am 777. You know, you drop that 777 in the chat when you're looking to take that profit. That's 777 in the chat. So when you drop that 777 in the chat, right, I want you to go back and watch a Talk with the Finance Doctor. I am 777. It's on our YouTube channel, BYOB Challenge. And so you definitely want to make sure that you watch that. You'll understand why you declare and decree that. And why am I emphasizing that tonight? Well, the economy, the things that's transpiring in the market, all of that moves the market, okay? All of that moves the market. And when we understand and we know what moves the market, how the market operates, what's going on, it's important to understand how you understand the market and how you develop that relationship. So what do you see that I have pulled up here first? I have the news. And so tonight we're going to talk about the BYOB cash out strategy, and we're going to talk a little risk management. So we want to make sure that we're understanding the market, we're reading the market, and we develop that relationship. So this is the news. Now, when we say news, no, I'm not talking about CNN, MSNBC, and all those other news stations that we've been programmed to watch throughout our life. I'm telling you right now, delete it. Don't watch it. What you feed yourself is what you become. You don't want to watch that. And I'm telling you that from, you know, in the nicest way possible, because you've made a decision. Remember, those people have a job. So this is part of your risk management, is emotional intelligence, your emotional management. And so those individuals have a job, and their job is to invoke emotion based on what's going on. They have ratings they have to maintain. So you always want to put yourself in a business owner's mindset, because the same way you're here because you made a destiny decision that you want to be your own bank, you made a destiny decision that you want to, you desire wealth. Well, they made a decision too that they wanted to report the news. And so one of the things that you always have to remember is they're going to say and they're going to do what's required to invoke an emotion. Well, you want to read the charts. You want to understand how the market moves. So you want to only be focused on what navigates and how the market moves, and what navigates the market, and what you know, how the market is works. And that's why we start here. But I'm emphasizing that because we got about 6 weeks to the election, you know. And in the last few weeks, that's what I was trying to say, in the last 3 weeks and moving forward, what you're noticing is that it has impact on the market. The things that transpire in the US has impact on the market. You have your technical analysis, you got your fundamental, and you have your sentiment. You have 3 different types of analysis. The technical analysis is what we're going to talk about tonight when I show you the BYOB cash out strategy. That is where we mark the charts up, understand it. Then you have your fundamental analysis, which is what happens, what's going on in the world. We got an election coming up. So, and then we still have Brexit happening. So those are major news events. Those are major things that will impact the market. The sentiment is how they feel about it. Now, this is part of why I stressed detox the news, because it's not about how you feel about it. It really doesn't matter how we feel. It's how investors feel. It's how the individuals that move the market, how do they feel about it? Because that's where the market's going to shift to, and that's where it's going to go. What's going to happen with you is we ride the wave of the market. We navigate, that is what we do. We ride the wave. So understanding that, we want to pour into us financial news. It's all about the financial news. So understanding the financial news, this is where we were today. So you see, this is what's left. And so as we come up on tomorrow, you see if you're up trading at 1:35 in the morning, there's a speech. So we always want to come and we want to look at these red folders, these folders that impact what's going on. And so you can kind of see, you know, for those of you all who get up early, Euro and GBP have quite a few red folders. Remember, we have Brexit. And then also what's happening this week. You notice the market kind of was a little slow. The market slowed down a little bit. So what actually happened with that is Federal Chair Powell's testifying. Now, why does US impact so heavily? We talk about it all the time. US is in the major currency pairs, and it's also calculated with the crosses. So anything that happens in the US market is going to impact globally. It's going to impact the market in its totality. So you want to understand what's transpiring. And then of course you see some JPY news. This is tomorrow. So of course you'll hear this again in the morning, but just want to kind of highlight to you all what's required, what we need to do, because I can mark my chart up, but you don't want to be in the market when this red folder hits. We don't want to be in the market at 4:30 in the morning. We don't want to be in the market at 4 o'clock when the red folder hits. So you'd want to stop trading prior to that. So now, unless you're swing trading, if you're swing trading, it has to be something that's going to shift the direction of the market, because you won't get impacted like everybody else will that's scalping or intraday as far as, individual. Now, I'm not saying it can't. Remember, I said if it impacts the change in direction of the market, but if you're swing trading, you typically, the spikes and things that happen with that, then you'll be fine for the most part. But you want to keep an eye on this. But what we've been seeing is the market's been shifting. And that's why we're talking about what we're talking about tonight. Now, let's talk about the BYOB cash out strategy. Let's talk about that. Now, if you have questions or comments while we're going through this, then make sure you drop it in the chat. questions, comments, and testimonies. You guys know I love a testimony. I got time for a testimony. So questions, comments, and testimonies, drop it in the chat as we're going through this. So the BYOB cash out is made up of 3 indicators, 3 simple indicators, 3 indicators. Now, so with that, you see that we have the stochastic. The stochastic is down at the bottom. This is a leading indicator. Then we have our 2 lagging indicators, which are my Hikinashi candles and my PSAR. Hikinashi candles, they're trend candles. That's why they lag. They're trend candles. And then, of course, I got my PSAR, which are the dots. That stands for parabolic stop and reversal. You notice that when the momentum in the market is moving up, they're at the bottom. Momentum in the market is moving down, they're at the top. So just so you understand the difference, if I change to my traditional candles, you definitely see with these traditional candles that these are traditional Japanese candles. They do not look the same. So these candles, you're trying to figure out how to read these candles, what these candles say, you know, what exactly they're saying to us. You know, it's good to know how to read the Japanese candles, don't get me wrong. But at the same time, my Hikinashi candles translate. So they actually translate for us. So this is what they do. So instead of you having to try to figure out and read the Japanese candles, my Hikinashi candles, they translate for us. Now, first things first, that's stochastic. Blue line cross over the red and a downward momentum around that 80. That means I'm looking for a sell. Blue line cross over the red and an upward momentum around that 20. That means I'm looking for a buy. Now, what I want you to understand is this is the BYOB cash out strategy. And as I finish explaining this, you see we're on a 15-minute chart. You can trade this strategy on any time frame. You can trade it as intraday, you can trade it, you can swing trade it, but the foundation of the strategy to get you in and out of the market, why within the first month, 14 to 21 days, you're going to understand what's happening. You're going to understand how to navigate the market. You're going to understand what is transpiring. So you definitely want to make sure that that is what you see. You definitely want to make sure that, you know, that is definitely how you're navigating the market and understanding it from. So this is just that foundation. This is that foundation of where it begins. Now, what I'm looking for right here is I have my red candle. My red candle, you see this, because I'm looking for a sale, I need this red candle with a flat top. All right, you see that red candle with a flat top. Now, I want you to understand something. This is what we would be looking at had the market been open at that, you know, had we been, this had been real time. You notice, what does the market look like right here? You see that as we're looking in the market and you see what transpired in the market, that, you know, where we're actually in the market. So you see that we're actually in the market right here. But when I come back to over here, so I'm gonna put an arrow up here because we're looking at a past trade. So I definitely want to explain that, because this is past time. This is past. This has already happened. When you're actually trading, what you're looking at is space and opportunity, and you're trying to determine where the market's going. You're looking at this to determine what's about to happen, where the market's transitioning to. And so you're going to take a trade based on that. So had anybody been watching this prior to this call, you know, in the 8 o'clock hour somewhere, you probably are already in GBP USD. As a matter of fact, you might have cashed out on it already, you know, just kind of looking at it. You probably had a take profit. I probably have some 777s that you should be dropping in the chat. So with looking at this, and now you see that PSAR flip to the top, I need all 3 indicators. I need all 3 indicators. But I also want to use something called time frame confluence. So I'm going to put it right here as well. All right, I'm going to put it right here as well. So with time frame confluence, now the strategy back tested at 92%. Back tested on every currency pair for a complete year on every single currency pair for a year. That's what that, so now that's where that 92% comes from. That means that some currencies are actually higher, because 92% accuracy was the lowest we had. So this, it works. And but time frame confluence is because, 1, you want to confirm it within the market. 2, you want to make sure you don't know your pip reaction time. That's how long it takes you to get in and out of the market. And then especially in times like now, where the market is shifting, the market is moving, you want to make sure that you are able to navigate and take trades. You have certainty that they're going to take profit. Now we want to drop down and checking my time frame confluence. And if I drop down, I'm looking for that sell. It needs to still be selling. All right. It just needs to still be selling. That's what it needs to be doing. It needs to still be selling. Now, you see on both of these, they're selling because the 5 minute happens before the 15. The higher time frames actually happen, you know, that determines the market, the move of the market, where the market is going. That's what my higher time frames do. Now, my lower time frames are actually all the movement, the activity. Now, when I go to the hour, when I'm sitting on the hour, this needs to look like, it needs to look like something that's going into a trade. It needs to look like something, it's looking like a setup. So in looking like, I knew I was gonna have some 777s. So, and looking at this, you know, and looking at this, then what I'm seeing is this one, you see, when we look at where this arrow is, you definitely see we're starting to get a curve on the stochastic. Now, if you are a 111, this is what you're looking for. You got that stochastic curve down, you got that red candle. I don't want you to start looking at deviations. But for those of you who have been trading, and so let me talk you through this, because we looked at, what was it, like 3 this morning? Either was it, no, that was yesterday morning, where we looked at 3 different trades and we were talking about that confluence. So when you look at this, this is important because you can see that, you know, I got a green candle that's buying, but GBP, because of the amount of liquidity that flows through the market, you can actually use the 30 minutes sometimes. I need to check my hour first. But you see, this is starting to get a curve on it. You see that? So if I drop down to the 30 minute, you can see this is starting to sell. But where were we in the market? Just like I say, my 111s that should probably wait. We only have 15 more minutes to the next hour candle. That says 11:45. The focal point on that is the 45. Every 15 minutes, you get a candle. So if this said 45, that means I'm going to get a new hour candle in 15 minutes. So for your comfort, you can wait 15 minutes to take this trade, to look at it, to ensure that it's going to be in a sale. And if you do that, okay, if you do that, it wasn't this one, it was this one. If you do that, then we would have been on the next 15-minute candle, which was right here. Now, you notice that, where was this candle? When you're looking at my time frame confluence, this candle is actually on the support and resistance line. When you probably got in there, you see it's pushing through that support line right there. So that's when we actually got that momentum for that push through. So we had it here, we knew it was going, but right here is when we got the confluence on the higher time frame, is when we got that push to actually take that trade. Now, if you're a 111, you do your 10 pips and cash out. So, or even a 222 that does not understand your support and resistance lines yet. Or let me rephrase that to where you have not mastered your support and resistance lines yet, because you understand that your support and resistance lines are the momentum in the market. That is that support resist, not the momentum, but you know what I'm saying. That support and resistance lines, they actually give you the points in the market where the market's gonna pause. We know we can take it to the first one. You definitely see that there's another one down here where the market actually pulled down to. So if I look, well, we have to look left quite a bit on this one. If I look left, you can definitely see that it lines up in that same space, in that same area. So this is where you would definitely be able to take this trade too. So 10 pips and cash out, or trade to your support and resistance line, okay? So as you're mastering that skill set. Now what that gave you, the difference that gave you is 55 pips. So that move, that was a move for 55 pips. So that could have either been 10 pips, that could have been 10 pips, or 55 pips. So how do you keep going? Do analysis on a higher time frame. How do you keep going? Put your trade in profit, you know, move your stop loss up. That's how you keep going. Let's talk about a stop loss. because I saw some things in the chat. So let's talk about a stop loss. Your stop loss, okay? Your stop loss, ladies and gentlemen, do not take a trade without a stop loss, all right? In its name itself, it means stop the loss. Now, we focus on positivity. You focus on what you want to manifest in your life. That is why we tell you all my trades in profit. That's why we tell you, yes, it's a 92% accuracy rate. Yes, you have individuals that are cashing out higher than that. So where you have a stop loss, this PSAR means a trailing stop loss. This is a support and resist. It means parabolic stop and reversal. No, I'm going through the stop loss right now. That is not what you use for your stop loss. The market tells you where your stop loss goes. These PSARs, you notice that how they, let me change the color on this one. These PSARs, you notice that how they flip when the momentum shifts. They flip when the momentum shifts. So right here, if I'm looking right here, just look at this one. You see we had, the market was moving, we had a correction, and it kept going. All in all, the PSARs were still moving up. The market was still going in an uptrend. The market is still going up. You know, you see the correction that happened right here, and the market went back up. And so this is what transpired. So in this, if my stop loss is in between my candles and my PSARs, look right here. If I put a stop loss in between the candle and the PSAR, I'm gonna hit my stop loss. We don't want to do that. The market is telling you where your stop loss goes. The market is telling you where it should be. So if the market's talking to me, this is mathematically calculated. Dr. Bywood is broken down what all it takes in all of the math classes that you slept through, you know, and understanding how all this stuff works and is calculated. So, you know, he explained all of that on one of his calls. But for us to understand, just like the Hikanashi candles translate, so you don't have to go do all of that math and all those equations, let the PSAR, all they guessing, oh, well, I'm gonna do a 10 pip, a 20 pip, I'm gonna pull out the calculator, I'm gonna do this, I'm gonna do that. The market's telling you where the stop loss is. Just look at the dots. Just look at the dots. So the market's telling you that you want it outside of this PSAR. So whether you want 1 pip or whether you want 5, 10, 20, 30 pips, but it needs to be outside, not on, outside of the PSAR. That means stops the loss. Now, I cannot stress that enough. And so when you're looking at, there are a few things you should be doing, because if you're looking at how many pips is in between there, the same way with the GBP pair, right? The same way you can expect that your stop loss is going to be greater on a GBP. The same way when I'm looking at GBP, how many pips did I get? We just talked about it. How far did this go in its totality? You know, all the way down here. That's a 120 pip trade just in that. If I come over here, this should not be 120. Well, this one is, right? I'm also on a higher time frame. But look, this is also not the same kind of drop. But when you're looking at this, you're looking at what's in these currencies, the momentum, the flow that's actually in there. That's 92. So NZD/USD typically has some. But which one do we not take? Let me see here. I probably don't want to pair it with that. So look at what's in this red. Look at what's in this red candle. That's 7 pips on a 4-hour candle. So look at this right here. You know how much we love CHF, right? And it's because of the liquidity in the market. So that's only 36 pips. I can do that on a 15-minute chart on a GBP. So if I know, and so when I look at what the stop loss is on this one, you see that's not even 10 pips. So it'll be a little bit more than 10 when I push it above that PSAR, but I did it to the PSAR because it's where you're taking it to. It's what you're taking it to. So just kind of keep that in mind. So you have the opportunity to put yourself in a lot more profit. And that's why we want to analyze things the way that we do. We want to make sure it's lined up. We want to make sure we take the time to do that. And then I want you to think about something. JP Morgan, they sent their traders home. They just sent their traders home last week. So when you understand that the big banks of the world, this is what they didn't stop trading because an election is coming up. They're just more meticulous. They sent them home because of COVID. But to highlight the fact that they have traders, we're talking about you being a bank. So they use tools. So how do I also increase? Make sure I'm using my tools. You know, as you're developing and you're making sure you want to use your tools. We train on the tools. You know, this is what we do. We train on the tools. So we train you to the tools so you understand how to utilize them. You understand and then we take trades on them in the morning. So also, we're talking about proper risk management, proper lot sizes. You know, I'm gonna come back to the charts in just a moment, but I'm gonna change my screen share because I want to share something with you guys. Now, this is a compounding chart. This is a compounding chart. We compound out all the time, but we're gonna compound in right now. So compounding is not a foreign concept to us at all. Compounding is not a foreign concept. You can really take 2 trades a day. You don't have to sit in front of the computer all day. You don't have to force it all day. You know, or you can take 5 trades a day. You can take 10 trades a day. You just want to practice proper risk management, right? Proper risk management. You also want to journal your trades. What does journaling tell me? Journaling is going to tell me that the Asian session is the one where I have the best relationship with the market. The London session is where I have the best relationship with the market. This, you know, these are trades. You know, how do you think I know? Well, also from studying, but how do you think I know about CHF? You want to journal your trades. You want to understand, you want to write down the trade you're taking, the time frame you're taking it in, the date you took it. So that's in the Facebook group. So BYOB Cash Out Facebook group. So you want to understand these things. So also you're going to have more profit because remember, now we're there, what I was saying before. Now understanding that, and with the point I was making is about our focus, is that means that there's a possibility of an 8% stop loss. We don't want to focus on that. But the reason I made sure you understand that stop loss is because you need to have it. Because if the market turns around, and I'll come back to that when we get on the charts, back on the chart. But if the market turns around, I don't need it to keep going. I don't want it to keep going. I want it to stop so we can stay within our proper risk management that you're looking at right now. And also using proper lot size. So right here, if I start my trade account with $500, okay, let's just say I started with $500, and I'm gonna come down to a 3% growth, right? And this is why when you guys ask us, well, what should my stop loss, what should my stop loss be? What should such and such be? What should my lot size be? You have to tell me what it should be. You know, just like when you sit down with a financial advisor and, you sit down with someone like myself who is planning your retirements, they ask you a series of questions as far as what do you want it to be? Well, this is the same thing. This is based on what you're comfortable doing. The exact same thing. So I can't tell you what's going to work best for you. But what I can tell you is that I start with $500. My growth percentage is at 3%, or you might want to do a 1% growth, or you might want to do a 5% growth. You get to play with this. You get to make this decision. Now, where are we starting? This is what we're going to talk about tonight, is this column right here, because we're starting at 10 pips and cash out. That's our foundation, 10 pips and cash out. So you understand that if I started with $500 and I am doing 10 pips and cash out, this stop loss, this is calculated with a stop loss of 15 to 20 pips. Some of them are more, some are less, as I just showed you. But just imagine if you did generic 20 pip stop loss. So we're not doing anything generic because the market's going to tell us, the market tells us what we need, what it's going to be. So that means that at 10 pips, so I don't operate in fear of loss. I understand that I'm balancing and I'm managing my trades. So even if I made a decision that I wanted to do 10 pips and cash out on here, then what you're seeing is that my lot size is a 0.15, not a 0.50, not a 1.0. It is a 0.15, proper lot size, okay? Proper lot size. And then you want to make sure at the 3% growth, that means that your profit, now this is approximate because as we discussed, every currency pays different. Every currency, you know, every currency is going to pay different. So don't look at this chart and be like, well, I only made $14.50, you know, or why did I make $16? You know, I want you to understand it's in the vicinity. It's in the vicinity of this. So when you look at this, oh, I made $15. So that means now your balance is $515. So now you notice that right here, 0.15, once again, 0.15. So look, I'm at now $530. So I don't need to be in a mindset. I don't need to be in a mindset that, oh my goodness, the market's slow this morning. Oh my goodness, the market's not moving. Oh my goodness, you know, I don't need that mindset. Even if I did 2 trades a day, this is still a better return on investment than your savings accounts gives you. This is still a better return on investment than your job is going to give you. Because when you look at this, we compound out. Did you pay a car note? Did you pay a mortgage? Did you look at actually what you end up paying now? We accept this as our reality all the time. So remember, we're professionals. We made a destiny decision. We are the bank. Not only are we the bank, we're the big bank, right? So if we are the big bank, because big bank take little bank, if we are the big bank, then you understand why this is important and why you want to do this, because they're not going to accept anything less from you when you pay those bills, when you pay that mortgage and a car note and or your credit card bill, everything that you're compounding out. So let's compound in. Let's not do this as a hobby. Let's be professionals about it. So we want the wealth that we desire. We want to be professional about this. So this is where that shift happens. So now, when you notice that, and why do I say it doesn't matter if you're going for more than 10 pips? Well, guess what? That's why I said we're focusing on the 10 pips. Look at your lot size. I'm going for more than 10 pips. Your lot size is now 0.02. You see the difference? So it doesn't matter if I'm taking this, like we just looked at a 60-something pip trade. It would have been at a 0.02. So I would have made the same profit if I'd have just took 10 of them. So you don't need to be, oh my goodness, I'm gonna miss a trade. Oh my goodness. No. Proper risk management, doing everything in order, you're going to end up. So whether you want to be in and out of the market, whether you want to be a swing trader, regardless of what it is, it's all about you understanding. That's about personality. What we're talking about right now is about your profit and your compounding. So what happens after 125 trades at 25 profitable trades, 25 trades and 125 trades in profit at a 3% growth from $500? At the end of those 125 trades, not days, at the end of those 125 trades, come on, slow down. Okay, it's still trying to roll. Come on, slow down. It's moving too fast. They don't want you to see the bottom line. Give me 1 second. I'm gonna roll it back down slowly. We're gonna try this. Slow down. Why is this thing going so fast? You see we at 123. It's like it's to 125. You see right here? We're at $20,000 or right over $20,000 at 125 trades. So how fast or slow you take them, whether to do 2 trades a day, 5 trades a day, whatever your heart desires. And that's at 10 pips. We're talking about 10 pips. 10 pips a trade. 10 pips a trade. At 125 trades, you had $20,000. I'm gonna just let them marinate for a minute. Because this is when you stop playing with the charts and you really get your relationship with the charts. This is when you stop playing with the charts and you really begin to understand the power of compounding. So let me scroll back up here. And so I just want you to understand it. So that's why you say one trade. And so this is why, you know why I wanted to share this with you? You said the chart blows your mind. Absolutely. I'm glad it does. Because we've been looking at the market and we've been seeing the market move. And I'm going to change my screen back. And we've been talking about the market, right? We've been talking about the market from the standpoint of understanding that when we're talking about the market and okay, well, it's slow right now. Okay, well, it's being impacted by what's transpiring, by the election, by, you know, when we start thinking like that, then guess what? You know, we want to make sure that, oh, I can just do 2 trades a day. I can just do 5 trades a day. I don't have to sit there and try to force it. When you start thinking about it from that mindset and you really start understanding it from that power, you know, this is where you're going to understand that it doesn't matter. We ride the wave. We ride the wave. So that's literally 2 trades a day, doing this properly, letting the trades manifest it, not forcing it right over 60 days. You know, right over, you know, think about that for a minute. Right in that time frame, you're 62 days, you're really talking about, I just made $20,000 from $500. So, and instead of me trying to force trades all day. And so no matter what's happening in the world, and you understand that we ride the wave of the market, we ride the wave of the market because we don't move the market. So it doesn't matter what anybody else is doing. It doesn't matter, you know, whether the market jumped a lot today or it went a little bit. Now, I'm not even talking about your indices. We're not talking about our indices. You know, I'll come over here and we pull up some indices. We pull up some indices. Yeah, so y'all must be ready to be the big bank. I see your comments. So I pull up some indices. You know, if I'm trading indices, go to the higher, whether you're scalping 10 points, and you know, this is money. These indices are money. Risk management. This is BYOB basics, risk management. You should never mix your indices and your forex. You should have 2 different accounts. I'm gonna say it again. Your indices and your forex, you should have more than 1 account. Treat this like your bonus check. This is your bonus money. That's what this is. Your indices is a bonus check. So because you already know we're compounding over here, we're compounding over here. So remember, if I got 10 pips, look how far that had to move for me to get my 10. I'm gonna just go a little bit more because, you know, we have our broker spread and your pip reaction time. So right here, look where that went. And you just made the same money as somebody who rolled it out to right up in here. So that you took to that first take profit, because we are doing proper risk management. Absolutely, 2 separate trade accounts. Perfect practice makes perfect. 2 separate trade accounts. You want to get to that level, you want to take it to the next level, you want to, and so let me not even say level, because we doing dimensions. So you want to take that to that next dimension, well, 2 separate accounts. Do not mix your indices with your forex money. Do not do it. Do not do it. And so you want to make sure you're not in too many trades. You want to make sure that you're leveraging properly. Those are things that you want to make sure you're doing. So before I move forward and kind of walk through something else, questions, comments, testimonies. Questions, comments, testimonies, drop it in the chat. Drop it in the chat. Questions, comments, testimonies. Questions, comments, testimonies. Now is your time. All right, so we're ready to be professional bankers, right? There we go. So so I'll go over the stochastic again. I'll go over the whole thing again. So hopefully that'll help. So blue line cross over the red. So I'll go over that. Where your arrow is, that's where the piece are flipped to wait to, okay, so let me go over it one more time for you guys. I'll go over it again. That's the purpose of tonight. That is the purpose of tonight. You got a better understanding. I'm glad. So blue line cross over the red in a downward momentum around the 80. Keyword around, keyword around. So around the 80, around the 20. So blue line cross over the red. Now let me show you where the weighting comes in, where the weighting comes in, and then I'll show you something else as well. So right here, so now if I line that up, now you know some of them you gotta wait a little bit longer. So some of them you wait a little bit longer, and some of them you're right here. That spreadsheet gave you so much. I'm glad it did. You got some motivation. So right here, so you see blue line crossing over the red and a downward momentum. So you see this is where that cross happened, right here. Now, of course, we're looking at a past trade. So looking at a past trade, you know, this can move just a little bit. So you see, but I want you guys to understand the basics of it. Blue line cross over the red and a downward momentum. Now, we don't get in a trade there. That's only one indicator. We need all three. So I have my red candle with the flat top. You see, this was one 15-minute. This was another 15-minute. My red candle with a flat top. And then I have my PSAR flipped to the top. Gotta have that PSAR. So, and just even looking at this one, you see this one, everything lined up at the same time. When I look at this buy, everything was like perfect alignment. Blue line cross over the red, you know, in the upward momentum, green candle flat top. Flat bottom, PSAR flip to the bottom. Everything lined up right there. But you guys notice sometimes you have to wait, and that's okay. Look at where this one happened. You know, we wait 40 years for retirement. We can wait 15, 20, 30 minutes, an hour for a trade, you know. So just put it in perspective. Now, what you see right here, and you see we had to wait for it to happen and manifest right there. So you see what you're looking at right there. So, you know, no, we're not adding any indicators, but I appreciate you. No, but no. So you do it right here. Now you come right here and we drop down, and when you drop down, so you definitely see where this went to. Now, and just go to the 5-minute chart. When I go to the 5-minute chart, it needs to still be selling, and we discussed the hour already. So definitely, oh, you're welcome. You're definitely welcome. So you see what we already walked through that. Now, of course, on Thursday, we'll add the pivots and we'll do all that other stuff. But just to kind of help you understand, and let me address, I'm going to address that because, you know, you're right. There's no, you know, the spreadsheet inspires you. There's no need to watch your chart all day. Absolutely, you do not. But let me help. You don't want to have analysis paralysis, okay? You do not want to have analysis paralysis. You don't want to come adding everything. When you understand the market operates in 3 areas of value. You understand price action operates in 3 areas of value. And so in understanding those areas of value, you can really, really begin to overanalyze and have too much stuff going on your charts. So with your areas of value, okay? With your areas of value, my areas of value, okay, you have trends. Trend is an area of value. Support and resistance lines, that is an area of value. And then of course your moving average, that's the area of value. So those are things when you're trading price action that you're looking for. So why is the accuracy with these indicators so high? If you notice the stochastic, let me show you. Let me add this for you, right? And of course we're gonna take it off. But if I put a moving average on here, you look at what my moving average looks like. You know, I didn't adjust the numbers. I'm not gonna do all of that because I'm about to take it off. But I just really want you to see, you know, how it really flows with the stochastic. So if I adjust the numbers to make it match the stochastic, it'll be exactly like the stochastic. In the stochastic, in the calculations of the stochastic, you have a moving average, which is, you know, a momentum indicator. So that is what that is. So let me go ahead and drop that off. Now, these are trend candles, okay? These are trend candles. And so some of the things that you see me do sometimes, you know, is I will add a trend line on there for you guys, okay? We can definitely add trend lines. So if I add a trend line on here, you'll see, actually, let me do it the other way since we took a sale. So let me bring this back this way. Right? So I'll add a trend line. These are trend candles. Look how nice and smooth they are. And so actually I want to do it on a higher time frame. Look at these trend candles because the higher time frames move the market. So these are trend candles. I definitely have a trend that's happening right there. You get those touches on there. So you definitely can see where it turned around, it broke the trend line, and now we're selling trend candles. So thank you, Keith. That's funny. So, and then of course, I have support and resistance lines. They're your lifeline in the market, right? Your support and resistance lines, understanding where that goes. And then of course, when you see the dots, this is a parabolic stop and reversal. So this is a moving stop, this is a moving trend line. These go with the market. So, because if you address the question that happened at the beginning of the call, it was about, because most of the time, where do you want to put a stop loss? Most people will tell you above a support and resistance line. And so you're trying to figure out where the market is going to come back. Is it going to break through the line? Do I do a 10 pips above it, 20 pips? How far above the support and resistance line do I go? Well, we don't have to figure that out. The market tells us where it goes. So I don't need, this is why the strategy works to the extent that it does. I don't need all that other stuff. I have my areas of value covered, and that's how you determine the direction of the market. But it interprets all that for me. So this is why BYOB cash out strategy works so well. And this is why you guys are cashing out. So this is why it's so many 777s in the chat. And just to kind of go back to help you understand something else, all right, let me show you something, and why we always say understand the market and don't try to memorize the steps. You want to understand it. You don't want to, it's not about memorization. It's about understanding. Because if I'm looking at this, actually, let me just say what we're working. If I'm looking at this and you see this red candle right here, this will be a confluence candle, because I'm not trading on the hour. Because if I was trading on the hour, I have to wait for a red candle flat top piece or flip. Let me check the 4 hour. 4 hour, I got confluence, drop down to the 15-minute. Same process, different time frame. But I can actually come here and I can look for a confluence candle. This would be a confluence candle right here. So this will really be a confluence candle. So if I'm looking for my confluence candle first, drop down, and you will see where you can enter the trade. Remember I said if you waited another 15 minutes, so because of where we were, waiting on that green line, this is my confluence candle. You see my confluence candle. Now what happened? It actually this confluence candle is breaking the trend line. My confluence candle is breaking the trend line. So that's when you got confluence. So you see, I can start here on the 15th, or I can look for my confluence candle first. Either way, I'm trading on the 15-minute chart. I'm still trading here. I do my 10 pips and I cash out and I'm good to go. Trade to that support line and you're good to go. How did I know it was a confluence candle? Let's go back to the hour. So you see, all these were green. And what are we looking for when we go up to the hour? We need it to look like we're about to take a sale, right? I need it to look like it's setting up for a sale. So if I see this red candle at the top of the hour, so at the top of the hour, I see this red candle. I see that this crossover, my stochastic is an oscillator. So my oscillator cannot be separated from price. So think about it, you need confluence with your oscillator and your price, because this is the price. I need confluence with my oscillator and my price, sell, sell. I don't need to be looking at this red candle, right? This is not, look at this one. So this one is, yes, it's red, indicating sale, but look, my stochastic points straight up in the air. So if you think about that, you have a sell right here, and you have a buy indication right here. That's not confluence. So this is not I don't want this one as a confluence candle. My price and oscillator is separated. I come over here This one is headed in the sell. It looked like it's going down. It's gearing up for that sell. This is gearing up, but I know I cannot trade the hour. I cannot trade the hour because I don't have the BYOB cash out strategy rules. But it looks like, it quote unquote looks like it's gearing up into a sell, right? That's how you know. Does that answer your question? So hopefully that answers your question. So that's how I know. So then I know I can drop down. Great, great, great. I know I can drop down at that moment, and I was able to take that. I could drop down right there, and voila, there I have it right there. All right. So that in itself is how I can take my trade. I knew it was a confluence. Grab my 10 pips, look for one more, do my 2 trades a day, and I have $20,000 in about 2 months. Y'all ready to be the big bank? Big bank, big bank. BYOB cash out strategy, big bank, big bank. So, all right, ladies and gentlemen, questions, comments, testimonies. Big bank, there we go. Questions, comments, testimonies. You need all 3. Blue line cross over the red on the stochastic, yes. So that's a leading indicator. So that's a leading indicator, all right? That's a leading indicator. So understanding that this is the leading indicator, that's why I look at that first when I'm sitting here trying. Now, of course, I already know your eyes. You're gonna see the whole thing at the same time, but you wanna train your eyes to where, you know, because if I see, like, let's say, if I saw this and like, you know, that's not a good one. If I see some people saying, oh, I want to take this trade, and or even in a buy, So I want one. So sometimes I was looking at someone. Oh, I'm glad. You see the light, so much clarity. I was looking for one that's not going with it. So you know you don't want to take that one. So it's not about one indicator, it's about all 3 indicators. It's not about one, you need all 3. So this is just the first one. This leads. This is a leading indicator. So this is a leading indicator. Absolutely, it's recorded. It is, yes, let me drop it in there, youtube.com/be challenged. There you go, youtube.com, BYOB challenge. Go ahead and subscribe and you'll be able to grab these. And so you're looking at this combined with this and you have it. There is a video to bring more clarity. There is a video in the Telegram pinned to the top that takes you directly to a playlist called Trading the BYOB Cash Out. That's the playlist. The first, and they're separated in videos. The first video is the BYOB cash out strategy itself. The second video talks about time frame confluence. So both of those videos will help you. It's actually a whole playlist that's going to help you. One of them is called Being a Signal. So you definitely want to wait that. So no, first thing, blue line, stochastic is leading. Stochastic is leading. Let me do this for you. Leading indicator down here. All right, that's the leading indicator. These are lagging. These are lagging. I was looking for one that kind of separated it, but these are leading, these are lagging. So lagging, and you never want all leading, you never want all leading, you never want all lagging. You want, and so this is the perfect combination all the way around. I got leading, I have lagging indicators. I also have, you know, I also have indicators that, I mean, the 3 indicators that give me the areas of value. So let me, before we transition, let me kind of break it down like this. So leading indicators are based on things that has already transpired. So I don't need to do anything that gives me a leading indicator. So you know, you all know that I have a child, you know, that's in school. So, you know, outside of the whole virtual situation, I'll break it down to you like this. Leading indicator. It's a school day. It's a school day, and Monday through Friday, it's a school day. Leading indicator means that during this time frame, that on a tomorrow's Wednesday. So on a Wednesday, during this time frame, during the week, during the school year, she has to be up on Zoom, first Zoom at 8 o'clock. You know, that's when she has to be on the computer. That's a leading indicator because one, based on historical events, based on what's happened in the market, you know, based on all of that, we know that it's a school day one and that she has a scheduled Zoom. So based on that, she's gotten up since school has started. She hasn't missed a day. She's been online each and every single day, right? That's a leading indicator. I have not done anything that tell me that it's about to happen. We haven't done anything. So lagging indicators mean that there's something that transpired to give you an indication that it's going to happen. So that's why you want a combination. So but just based on the fact that it's Wednesday and it's in the school year, that she's expected to be on that Zoom, that is a leading indicator. However, that doesn't mean she's going to get on the Zoom. So now I need my lagging indicators. My lagging indicators is I actually, my alarm clock went off. I got up and got her out of the bed. That's a lagging indicator. She got up. That's my Hikanashi candles. PSAR, she got up and got dressed. She ate her breakfast. That's the other lagging indicator. So those two combined together means that those are indications that she's going to get on that Zoom. Her cashing out is when she logs into that Zoom, because that was the expected outcome. The expected outcome is that she was going to log on to Zoom at 8 o'clock. So leading is Wednesday, it's a school day. Lagging, my clock went off. I went there and woke her up. She actually got up, got dressed, ate a breakfast. So before she's doing things to put her in position to be on the Zoom at 8 o'clock. Those are my lagging. This is my leading. So now when she got on Zoom at 8 o'clock, bam, we have our outcome. We took profit. That's what that means. So that's what that means. That is how you break that down. Okay. That is how you break that down. So she don't get up. She can get up any day. She can get up any day. But if it's not a weekday, so let's say it's Saturday, then why am I even looking at her being on Zoom at 8 o'clock? That's a stop loss. You know, we don't want to look at that first. I don't need to know that it's 8, you know, she got up out of the bed, because we might be going to the park. We might be going somewhere else. This is Zoom, the park up here. So now I hit my stop loss because it's nothing, this wasn't an alignment. It's a weekend or it's a holiday. So we're not going in that direction. So hopefully that brought some clarity as to why and how you look at it and analyze it. Questions, comments, testimony. Got it. Definitely. Awesome. All right, guys. Well, everything you said and explained tonight is awesome because everything meant so much to me, and I'm sure it will help when trading, and we'll surely practice and keep that in mind. Thanks. You are so welcome. You are so welcome. So with that being said, ladies and gentlemen,